Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. When I was in a business school, overtaking Japan in terms of GDP was like a dream, but today we have achieved it. The dream comes true. And the second positive news which came last week was that India's Q4 GDP data came at 7.4%, bringing India entire growth at 6.5%, double of the world economy, which is growing at 3.1%. Now the question is whether the growth is a broad based and whether inflation is under control or not. Now if you see the table, both manufacturing and service PMI are trading above 50. Whenever it is trading above 50, it is a sign that it is in an expansionary mode. Second important aspect, if you see the table, both manufacturing PMI and service PMI are increasing. So it gives us a confidence that both are doing good. As far as inflation is concerned, it is in a declining trend. It has come down from 3.61% to 3.16%. RBI tolerance level is from 2% to 6%, where median what they target is 4%. Now let us see how we are doing in terms of managing our finances. If we see the fiscal deficit data, it is on a declining trend both in numbers and in percentage. In terms of percentage, we were at 9.2% in the year FY21. From there, we have come down to 4.8%. In terms of absolute number, the number was 18.8 lakh crore and now it has come down to 15.77 lakh crores. In a world where debt is increasing across the world, we are on a downward trajectory. This showcase that we are spending disciplined way. Second, improve tax collection, particularly in terms of GST collection and corporate taxes. Reduction in fiscal deficit will enhance India's macroeconomic stability, help contain inflationary pressure, and improves investor confidence. Now we have RBI Monetary Policy announcement on 6th of June. Basically, what will RBI do? When inflation is low, growth is steady, fiscal deficit is under control, whether RBI will pause or go ahead and cut the interest rate. In order to come to a conclusion whether RBI will go ahead and cut the interest rate or not, let me give you a data point. There is a concept called GVA and there is a concept called GDP. In terms of GDP, the growth number was 7.4%. But in order to understand whether we have really done well or not, economists prefer a data point which is called GVA. GVA, if we see, we have not expanded drastically as compared to GDP. The GVA number was on a lower level as compared to GDP growth. Now let us understand why GVA number came down. It came down because government did not spend as much what they were projecting it to. So it was 40% lesser than the previous time in the fourth quarter, because of which GVA came down. This is showing some concern about the growth. Now the second concern is if we see the entire year GDP annualized number, it was at 4-year low. Third concern is that private investment still not picked up. It is all the expenditure is done by the government. And the last uncertainty point is global headwinds. With tariffs uncertainty across the globe, there is still a question mark whether we'll be able to grow at 6.5% or not. Now, because of all of this reason, we expect that RBI will go ahead and cut interest rate by 25 basis point in this June meeting. If RBI does that, there will be two impacts. First impact on the currency is that on a short term, it can get weaker, and on the equity side, we expect equity market to perform well in the near term because of this news. Now let us discuss outlook on rupee. While the global bond yields of US, UK, Japan is on a rising trajectory, India's 10-year yield is on a declining trajectory as market anticipated that RBI will go ahead and cut the interest rate. With RBI cutting interest rate differential between India and other major economy is going to reduce, because of which in the short term we can get some pressure. But the question is whether the short term pressure is sustainable or not. We have few positive factors like fiscal deficit is under control, CPI inflation is under control, growth momentum remains strong, crude oil prices are stable, and globally we are expecting that dollar index is going to underperform for next couple of months. Therefore, we do not anticipate a sharp depreciation in the rupee. 8620 is going to act as a strong resistance for the pair because of any negative news. If the pair moves towards 8580 to 86.20 level, that will act as an opportunity for exporters to increase their hedge ratio, and for importers 85 to 8520 remains a strong buying zone. With this, I will end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे next week. Thank you.